Michael Siebold, partner of YC, stood up in front of 400 founders and said, none of you are special, and here I'm going to prove it. Raise your hand if you've been outreached by Sequoia. Every single founder raised their hand.
Wow. As YC gets bigger and bigger and bigger, do you think the value of that brand deteriorates at all?
We did apply to YC and we did not get in. In fact, 2012, I have a one-line email from Paul Graham that says, you don't have a technical founder, you're out, PG. That was it.
Once a year, I have this craving to eat Pakistani food, which I think is the best food from that entire region.
You've said that before.
Also, like a nuclear bomb in your stomach afterwards. And so all night I was waking up and popping tons.
Hey everybody, welcome to Top Line. It's Sam Jacobs. I'm the CEO of Pavilion, and I'm joined by Asad Zaman, the CEO of Sales Talent Agency, and AJ Bruno, the CEO of QuotaPath. Today on Top Line, we're going to be talking about Y Combinator, the famous incubator and accelerator, and talk about, does YC offer an advantage to early stage founders versus their other options? We're also going to be looking at ChatGPT 5's release, as well as the return of negative margin businesses. Replic's margins are negative 14 to 36% this year. That means for every dollar they sell, they lose $1.14 to $1.36. Is this a great business? We'll talk about that shortly. But before we do, let's get into it. AJ, how are you, sir?
I am fantastic. I have had a great week. My daughters are at camp. My wife and I have date nights lined up every single day this week. And oh man, the smile on your face, Sam. Sam's envisioning what that would be like. He sees it. He's like,
we have date night every Saturday over here.
We're my wife and I are going to Cancun this weekend and going to be sipping pina coladas. So what is not great right now? Everything is amazing.
Awesome. That sounds a lot of fun. What are you going to do besides sip pina coladas? Are you going on a catamaran?
We are going on a catamaran. We are absolutely going on a catamaran, 100%.
Are you doing morning yoga?
We are doing morning yoga, and we're getting a couples massage, and we're doing all the things. And I'm reading a book on the Concorde right now. So I'm going to finish the book on the Concorde on Saturday, and it's going to be awesome. So
awesome. Asad, how are you?
I'm good. Once a year, I have this craving to eat Pakistani food, which I think is the best food from that entire region.
You've said that before. You've said that before.
It really is. It really is. But it's also like a nuclear bomb in your stomach afterwards. And so all night I was waking up and popping tums. I think I had like 10 at night. And so I had a rough night, but I enjoyed my way into that.
I love that we can go from sipping pina coladas as a visual to what Asad just gave us right now. So
he could have been more graphic and it would have been more uncomfortable. I love that he went to the tums. Hey, I'm just popping some tums.
Just popping some tums.
Not shuttling back and forth to the restroom.
Oh, it was a disaster.
How are you?
I'm really good. I was on the road for 3 weeks and I was going a little crazy. And I am back at home in Barcelona, and I am back to a routine. And I feel really confident and optimistic and grounded. And I don't think I need to travel for 3 weeks in a row anymore. I don't think it was good for my mental health.
By the way, I had like 4 people reach out to me about like the hot takes of what would you know 5 years that would surprise yourself today, 5 years ago. And 3 of the 5 said, AJ, I knew you were going to say travel. I knew you were going to say that traveling less was going to be the thing that would surprise you. And it is. And I like, you see it when you have 3 weeks, you're like, okay, it was productive 3 weeks, but thank goodness I'm back home.
Well, I have a 4-month or 5-month-old baby. She'll be 6 months next week. But and so my partner is home pretty much alone, taking care of the baby. It's really, really hard. And even me being around to do a smattering of things helps out tremendously. So back to working out on the right schedule, back to eating right. That's the other thing. You eat terribly. I feel confident and confident and optimistic. I'm excited to talk about YC because I'm sure we've got some hot takes. Asad, we did a ton of research on YC. Walk us through it.
We did countless hours of research over the last couple of weeks trying to analyze YC to figure out, is YC still worth it? Specifically, if you are an operator thinking of starting a company, are you better off going into YC? Does it give you an edge? And what if you are an employee are you better off joining a YC startup than any other startup? So those are some of the things we're going to discuss. Before we do it, let's just frame the discussion a bit. So what is YC? YC was started in 2005 by Paul Graham, his wife, Jessica Livingston, and a few others. YC is an accelerator. What's an accelerator? It's basically if you are a founder, you have an idea and tons of enthusiasm and a lot of blind spots. An accelerator is a place where you can go and they help you fill those blind spots. They accelerate your progress. They take something in return, but they accelerate your progress as the trade-off. And YC is considered the number one accelerator in the world. 8,000 startups have gone through it. These include companies like Stripe and Reddit and Rippling, and some data on YC. So on average, 25 to 50% of a YC cohort gets acquired in about 10 years. The median time for an exit for around $100 million is 4 years. Between 100 million and just under a billion is 6. And for a billion plus, it takes 10 plus years. The smaller exits are the majority of exits. So the $100 million exits are 60% of the overall exits. The $1 billion exits are about 7.7%, so billion plus. But what's interesting is that the exits that happen under 9 years, which are under $1 billion, they make up 90% of the exits and only 50% of the exit dollars. The last 10% of exits deliver the next 50% of returns. And the last couple of things, 145 billion has been invested into YC startups. This has resulted in $270 billion in market cap from the companies that have gone public, Airbnb being a big one of those. And then about $15 billion in acquisitions. And there's with the companies that haven't had an exit, this could very well double. So those are a few of the things that stood out to us. With all this and the rest in mind, Sam, do you think from what we have seen and the thinking you've done on this topic, how do you view the advantages to a startup going into YC? What do you think those advantages are now?
Well, there are two. They also speak perhaps to the value of Pavilion, my company, and perhaps to the need for us to launch our own accelerator. There are two advantages. The first is the network, and the second is the signal. I think there's a third advantage, which is probably the content, but I think the content itself is probably more of a commodity. I don't think there's a ton of proprietary insights that aren't going to make their way out into the world at large. But in the same way, going to YC is effectively, for me, I would put it on a higher standing for startups than going to Harvard. I think it is a very important signaling function because of what it implies. The first thing it implies is, you went through a selection process. The second thing that implies is that you have access to the hundreds and hundreds of people that consider themselves YC alums in addition to your cohort that you can rely on, leverage. Oftentimes, YC companies are selling early versions of their product into their cohort to generate initial demand and initial momentum. So I think the value is the brand. I think the value is the alumni network. And I think the value is the credibility you get in a fundraising process. Those are real advantages. I also think, I just Googled this while you were talking. It's just really funny that Parker Conrad took Rippling through YC when he had already had Zenefits. Yes, it had an ignominious, downfall, but nevertheless, Parker Conrad could have raised money from anybody at any time and chose to take Rippling through YC, which I think is a testament to his perspective on the value of the brand, the value on the access to capital, and the value on the alumni network that you can tap into. And I think from where I sit, trading 7% of your company for speed and leverage like that can be worth it if you're going to fully exploit the network.
AJ, what Sam said is the argument for going into YC. You were a founder. You would have considered that as well. Does that hold true to you at this point? Like, you've gone through building a couple of startups. Do you think your life would have been much easier as a founder as you were building these businesses out if you'd gone into YC versus how you did it?
Well, I appreciate how you put that perspective because we did apply to YC and we did not get in 2012. I have a one-line email from Paul Graham that says, "You don't have a technical founder. You're out. PG." That was it. That was the whole email. And so we didn't get in. We did go through Dream Adventures and Accelerator, and I cannot talk more highly of the value that accelerators bring specifically to first time founders and the structure it is. So, as a part of this, from a research standpoint, I talked to a handful of YC founders that and just talking through the value, and some are fairly successful. And they had some really interesting comments around this. First, YC has gone through a lot of evolution. You look at the cohorts, they're now up to 4 cohorts a year, by the way, not just summer and winter. And so they have 10 times the number of companies a year going through than they did when they first, certainly when they first started. You mentioned Jessica Livingstone. There's a really great book, Founders at Work, which tells the early stories of startups that her and Paul Graham had interacted with. So I highly recommend that book if you haven't checked it out. But the thing that I always find, and the thing that Sam said, is this idea of a network. This idea of you have someone to call. If you have a problem, there are hundreds of founders that have dealt with that problem, and you can call on them. And that 7% is really invaluable for that reason. It's how do you form an entity? Who do you actually talk to? Because you can make all these mistakes. So you could go through a year and a half, 2 years of doing it and getting to the same conclusion, or you could go through 3 months of YC and get to the same conclusion. And that's what the value of it is. I think there's some level of what the marketing says about YC, and you have all heard over the years where investors fly out to demo day and just write 25K checks to anyone coming out of YC. But the reality is most companies won't be successful. And the ones that get funded in YC are not necessarily the ones that will see success long term. In fact, the founders that I talked to, the YC, said that's what they were told directly. They were told 2 things. One, Michael Siebel, the partner of founder of YC, stood up in front of 400 founders, 200 companies, and said, "You all aren't special. None of you are special, and here I'm going to prove it. Raise your hand if you've been outreached by Sequoia." Every single founder raised their hand.
Wow.
And said, that is exactly the example of why you're not special. So you have to understand, there's maybe 1 or 2 of you of the companies in here will be funded by Sequoia at the end of the day.
What's interesting, AJ, is that if you took those 200 companies and put them in a stadium of 100,000 startups, and then ask that same question, how many hands go up? Those 200 hands go up, but what percent of the other hands go up? Not that many.
The point that I think Michael was making, which I absolutely love, is that there's still a path forward to see success, and do not let your ego get in the way of that path forward. You need structure, you need cadence, you need operational efficiency long term. And that's ultimately what I think YC internally brings to the companies. They get the best of the best, sure, and the marketing talks to it, and the data shows you're going to get the Airbnb. And that's the other thing that I always see. The B2C companies get all of the mind share.
But they were the biggest winners up till now, right?
Well, there's a lot of companies like Planwell is in there. I mean, Rippling you just mentioned. I don't know if that's true. I think the founders that I talked to said YC internally is long on B2B.
Yes.
And that's true. Stripe a B2B company or a B2C company? I would
B2B. B2B. Yeah.
But if you think about that 2-3 biggest winners, you have Airbnb as the biggest ever winner that came out of YC. You have Coinbase, you have Reddit. Those are the 3 biggest winners that they have that are publicly traded companies. Stripe is right up there, but Stripe is like then the 3rd or the 4th of that list. And then there's a bunch of B2B under that. But initially, YC was very B2C focused and became B2B focused.
Sure, like Dropbox is a good example where that's probably a B2C to start. It's not a B2C start today. And that was a solo founder. Right. And that's kind of like the one part of the marketing arm. It's like, oh, if you can do it as a solo founder, then all the solo founders are going to apply to it because they see the success.
I have this really interesting data point that I had looked into, which is around if the startup is hot on demo day, every investor wants to invest in them. Is there a strong correlation with that company being an eventual winner? And there's a small correlation, but nothing meaningful. And so some of the biggest winners, even in YC, even on demo day, you can't tell. And I think Deal was an example of that. Deal wasn't a hot demo day startup, but obviously is a massive organization. Sam, do you think this...
And also Deal went through a cycle with a friend of mine that went through. And
Oh,
she had said directly that there's deal, like no one talked about deal. No one thought
Oh,
deal.
yeah, man.
There was
Yeah.
a Notion competitor that everyone was like, "Oh my goodness, this company's going to blow up," because it was like right before COVID, and then like it did blow up, but it's no longer active. It blew up in the wrong way.
blew up in the bad way, not the good way.
Sam, do you think this culture part is like one of the biggest things they do? Like this thing that AJ just spoke about, where they tell you they don't let you feel too special, but and then they also help you understand the type of environment, energy, pace that you need to implement in an organization. Is that something that is like at the top of the value prop, that if you go there, you basically want to plug into something that will help you develop a true culture that maximizes your probability of success compared to all other accelerators?
No, I don't think that's the top thing.
One of the top.
No, I think every I think people that are successful are going to work really, really hard, no matter what. And I think they're going to build cultures of high performance. I think any accelerator or any place that convenes, ambitious, optimistic, hardworking people is going to convey upon them that it's going to require a lot of hard work, a lot of discipline, a lot of humility in order to achieve their goals. I think that to the point, the benefits are brand, the signaling brand, the idea that I was just imagining as AJ was speaking, like there's a couple hundred people whispering about each other, sharp elbows. It reminds me of Top Gun or some kind of like driving school or something like that. But it's like the best of the best and the people that are all looking at each other and trying to figure out. I think that probably helps everybody understanding that everybody there was hand selected. Everybody there has an opportunity maybe to meet Sam Altman or Gary Tan or Paul Graham. And I think that conveys some kind of kinetic atmosphere that I frankly haven't been a part of, but would love to be a part of. And I think that that's probably pretty motivating. But I don't think YC has some secret formula on what kind of culture wins per se. I think that what they have is an incredible brand, access to capital, and they get the best deals. They can hand select all of the best opportunities. So I think what's really, really interesting, because even I'm sure you guys are an LPs in some funds, and it is real that the one of the data points that we share that I think is hard to overstate. 50% of the returns took longer than 10 years or longer. 50% of the $240 billion in public market cap took over 10 years. And I think that is something that is not obvious to people, particularly when, if you're writing, for example, let's say you cut a check into a private company, maybe you decide to dabble in seed investing. The reality that if you're going to make money at all, it's going to be in 10 years.
Yes,
I don't
ma'am.
think people really process that. And I know that, my friends, we're all part of a small group that meets regularly that has this person in it who's an LP in sort of one of these well-known funds that convenes all of these go-to-market operators and tries to invest on behalf of that pool of LPs into like high performing companies and present itself as some kind of advantage. We should talk about that a little bit because I have not seen any advantage that would benefit from being affiliated with these companies yet, because I don't think these LP networks are designed to properly deploy their expertise in a useful way. I could be wrong. I'd love to hear AJ's perspective on that, because I know stage 2 is an LP in QuotaPath. But I will tell you that I get texts from this person, and we're joking because there are some early returns that are coming in from the first vintages of this fund, and they're all losers. And that's so. But my point
That's
is,
okay.
yes, they're all going to be losers at the beginning. Like what you want is for the losers to fail as quickly as possible, so you don't have to put more money in. If they're going to be winners, they're not going to be for another 6 or 7 years if the fund's vintage is 2021. And I feel that even as an LP in a private equity fund where and of course I'm an LP in a 2021 vintage. So I'm probably not going to make any money at all if I make my money back at all. But the point is, even in private equity that has 5 to 7 year holds, it's a long game. It's a long game that people don't seem to really process.
I know it's anecdotal, Sam, but I'm an investor in SeatGeek, And I found that through Dream Adventures, which is the accelerator you went to. So one part is the network effect. Their demo day was a year before me, so I didn't actually go. That's 2012. Uh, I don't. If you are not out there, not familiar with SeatGeek, they do secondhand ticketing for all of the biggest venues. I mean, they're $1 billion company. So behind Ticketmaster, and then I guess
StubHub.
tickets. What is it?
StubHub.
StubHub. Yeah, right, exactly. StubHub. They're the third biggest, and they've announced going public 3 or 4 times over the last 3 or 4 years. And so the return, it's still a private company, and so no one in that is seeing returns right now. And that's just the reality of the situation. What I will say though is that YC Demo Day, Techstars Demo Day, Dream Adventures Demo Day, they were all shows, they were all production, they were all marketing. So they definitely have the hype machine in a wild way ratcheted up. So as a founder, first off, you're not sleeping at all during the 3 months and you're like fully engaged. But the last week, you're preparing for demo day and you're having 15-hour days. Like I clearly remember being in a room, going over 15 hours just over and over and over again. And
they often say this is the hardest they've ever worked, like YC
the
founders.
hardest I've ever worked was the week before demo day of Dream Adventures. We were using Prezi, which Prezi's still around, but at that time you had to actually code front end code in React. And then also, I think it had Java that was being used. So we had an engineer that was coding our presentation because it was this cool 3D animation, and I couldn't hit forward after an animation. Otherwise, the whole thing was screwed. So you can go on YouTube and find my demo day presentation. And I start it and I say the first line and I accidentally clicked it twice and I had to start it over and I just completely blanked. I had to restart the whole entire presentation and just start over. So I say the first line twice during it. It's so ridiculous. That's how stressful it is. That's how much buildup there is. Everyone wants to be funded. We were told for the entire accelerator program that there's no one that's ever gotten funding during the program ever. And I was like, okay, we're going to prove them wrong because everyone wants to prove it wrong. We're going to prove it wrong. We're going to prove it wrong. Going to prove it wrong. We were actually funded a week and a half after the program, so we didn't count for it. We did not prove them wrong. But what you're doing in that is you're creating founders that have this growth hacking mentality, and all of YC has this. I'll give you a quick example of what I mean. We had speakers that would come in for an hour or two that would talk to the entire cohort, and then afterwards they would meet in like a speed dating round of 20 minutes or less, even sometimes. Well, what Matt and I did, my co-founder and I did, was we would always take the last block. As soon as signups went up, we took the last block on sign up on the G Sheet. Why? Because we didn't get 15 or 20 minutes. Sometimes we got an hour. Sometimes we got 2 hours with that. So you're always thinking about that as a accelerator founder of like, how can I make the most? How can I optimize the most? And with AI, which I'm sure we'll talk about here in a second, you put that in a hyperdrive on like, how can I do the most efficient thing inside the program I possibly can?
So here's some pushback on this, right? So there will be some people that'll come back and say, okay, but one of the big advantages of being a YC company is that your first 30, 40, 50 customers, YC really does help you get them. And that's true of many accelerators, right? They'll help you tap into your early customers. There's I forget the guy's name, Gil, who does a lot of the cybersecurity investments in Israel. He's known for helping you get your first million or so in revenue through the relationships they've built. And the same goes for YC. They help you get the first 30, 40, 50 customers. So you get these early customers and you get the standard valuation that you get coming out of YC is much higher than that type of company would have on average in market. So I think right now it's like a post of somewhere between 25 and 30. And so you come out and you've gotten a little bit of traction with customers, but you haven't necessarily, you've kind of hacked your way into the customer base. You've raised money at a pretty significant valuation, which just gives you limited room for mistakes now, right? Like you have to execute really, really well to be able to then raise that next round for it to make sense. And that's a lot of pressure that a company is taking on. And sometimes pressure is good, but some companies need more time. Some companies need to breathe a bit more. to be able to work. And sometimes this type of pressure can be damaging to a company that otherwise might have had a better shot at success. What would you say to something like that? That's a pushback I read a lot on forums.
Well, I just one quick anecdote on that. I mean, I had a chance to invest in Fathom coming out of YC, and that valuation was like, to me at the time, this is 2021, was insanity, and I passed on it, but got proved wrong. Like that was actually the right valuation for it. They didn't. I mean, they didn't even have a product out the door when they were raising that pre-seed. And to your point, though, the blitz scaling Reid Hoffman of getting your early customers through YC is 100% true. Captivate IQ, a customer or a competitor of ours, competitor of ours, went through YC, and when we got introduced to like Carta, for example, they're like, "Oh, well, we use Captivate IQ." Like, what? How are you using a like super early stage company? And then you look at it and it's like, oh, the CFO is connected to YC. And that is true. That's exactly what happens in that early stage. And that traction does matter for sure.
What do you think, Sam, of this criticism we read online about YC and the other such, like there's other such pushback that people give?
I think there's three dimensions that I would consider. The first dimension is, what is the real purpose of YC? And the purpose of YC is it is a fund. And it is designed to produce fund economics, which are power law economics that incentivize companies to pursue massive outcomes, understanding that most of them will not be successful. And I think when we look at 135 billion deployed against 270 billion in market cap, or I think the original cohorts 11 million deployed for a couple billion in terms of returns. I don't know what the DPI is on YC, and we don't have that data, but I think anything that you say has to be viewed from the lens of it is a fund, and it is pursuing fund economics. Now, the second dimension is, yes, but if you are a founder, you are one of one. You're not part of, you don't view yourself as part of a portfolio. You view yourself as, this is my life, this is my company. Is it a good idea for you to pursue YC? And I think that's where the third dimension comes into play, which is, well, what is your risk profile and what are your motivations, and what is your ability to tolerate risk? And that's why YC famously, I think the startup industry in general famously, but especially YC, skews to young founders. And I know people that are in their late 30s, early 40s that applied to YC and weren't even considered, and it's because. Why is that? It's because YC has a point of view on risk. And so the point is, if you are a young founder, is it a good idea for you to pursue YC? If you have a high risk profile, I think the answer is yes. I think, does that mean that in every instance it's going to work out for you? Of course not. And if you are middle-aged and you don't have a high risk profile and you're trying to build a lifestyle business, or you're trying to build a business that is a private equity business, not a venture business, then don't go to YC. Understand what you're getting into. Is blitz scaling the right answer for every business and every business model? Of course not. Is it the right answer for Pavilion? No, not in its current incarnation. Should Pavilion go through YC? Well, I'm non-technical and I don't have a co-founder, so I'm definitely not, and I'm 48. Maron, that's 3 strikes. Paul Grant, and I love Israel. So those are 4 strikes against me. So I guess where I come out on it is like, if I were a smart, precocious, mid-20s technical person, 100% I would do it. I would do it just for the experience. I would do it because, of the point of like the 50% of the returns after 10 years. Like I would do it to fail early if it wasn't going to work.
Early. I think that's a huge thing. Like I think back to when I was a founder in a university, we were so naive. We were abroad for 2 years. We literally lived the most throttled lives and come abroad, and we didn't know anything. And I think we had some interesting wins along the way, but we weren't able to make it work. And it was a very informative experience. But I think of where each person in that company landed up. One of them manages the money for the UAE's royal family. The other one was the youngest partner at Accenture. The third one is myself. The fourth one is the chief product officer.
Myself needs no explanation. That's
of
what
a of a blockchain gaming company worth $500 million. Like, this was a good crew of people. We just were so naive and had so many blind spots. And being part of it might not have made us win, but we would have failed a bit faster and had the type of support that we would have needed to have a real shot at it. And at the time, we probably didn't even know YC existed until too late in the game. Here's a interesting anecdote.
One note on that, Asid, that happens, and I don't have the stats on it, but it is actually fairly common for companies to come into YC and then pivot to something completely different. That's common. Also common is for companies to actually combine founders and superpowers. That happens pretty frequently. So it does exactly what it takes the best of the best and puts them in an environment where there's a collaborative opportunity to work. And sometimes at the end of a program, teams are like, actually, we're better suited together to figure this out. And
Yeah,
I've seen that.
I think that is a really, really interesting take, and something that we're going to come back to and discuss in a lot of detail over the next many, many episodes. But for now, this has been a great discussion. It is time to talk about a couple of the wins from the last week, 2 weeks, 3 weeks. You pick. AJ, what is?
So I know I just hated on GPT-5, but on Friday afternoon, myself, my head of AI ops, Brandon, and my chief product officer and I vibe coded for 3 hours. And we went from Replit, GPT-5, Claude, Lovable, Cursor. We used all of them and did a whole bunch of use cases. Had a really fun time doing it. Really interesting. GPT-5 was actually the best, in my opinion, out of all of them at coding. Yeah, it
The
was
results
great.
are strong. That.
So I know I just hated on it, but I'll actually say GPT-5 is from a model standpoint is it's quick, it's efficient, and it actually does a lot of things that make it look like it's a modern.
It's so interesting.
All
The
of these,
expectation was so high of them that even though the model is better than everyone else a little bit, people are like, well, then this is the end of the world then. It's like, relax, guys. It's still the best.
It's crazy how groupthink everything kind of became. So all the other coding, like they all use the same libraries. They all look very similar, and it just feels like that bot breath that Sam talks about. You can see it in the code. GPT-5 actually didn't have that as much. So that's what I appreciate. So that's my win of the week.
Sam.
My win of the week were ticket sales are tracking 50% ahead of where they were last year for GTM 2025. Last year we did it in Austin. This year we're doing it in Washington, D.C. We are launching, for top line listeners, they'll know we're launching Pavilion Gold. We're launching Pathfinder, a new AI bot that synthesizes all of the conversations that happen across the Pavilion ecosystem into one interactive layer. That will be the leading voice on GTM. We're launching Small Councils, and we're launching Top Line as as an official media property. So and it's in DC. My mom will be there. Henry Schuck will be there. Alexa Grable will be there. Josh Barrow will be there. Asid Zaman and AJ Bruno will be there. So I'm really excited about the momentum. It's going to be fantastic.
I'm excited to hang out with your mom. That's cool.
It's going to be. She's very bossy. She's like your mom.
Very opinionated. We launched this project about a week or so ago on trying to conceptualize a product, and product in our context is just the delivery that we do on a project that is 10 times better than anything that exists out there. And since then, I've had many conversations with people in the business that have been thinking about this, getting their ideas. This will be a long project, but just initially, within a short period of time, it just feels great to see how energizing it was for the people that I was discussing this with, as well as some of the ideas that come out of the different nooks and crannies of your business. Having smart people in the business is really helpful when you're going through something like this, because they will come up with things that you didn't think of, and that's humbling and exciting. And so that was my win.
Love it. Well, folks, it's been another great episode of Top Line. Give us 5 stars on the iTunes Store or Spotify, wherever you get your podcasts. Hope you smash. Would you please give a smash to the subscribe button on YouTube and share some of the clips that you see, and tell your friends all about Top Line. We're excited to bring you this and many more episodes over the future. Thanks for listening, everybody.
Bye, everyone.
Bye.